barrel. What's your sense for what the oil market is signaling right now?
Well, I think really the contract you want to focus on is that July, because it broke through 20. Remember, June has a lot of restrictions on it. Some of the FCMs are putting June only on liquidation only. We've seen a lot of the funds, they've rolled out of that June contract. But I think $20 July is somewhat supportive here. Remember, we're working our way out of this kind of phase 2 in the economy right now. This is kind of the bridge between that liquidation going into more of an economic recovery. We think the supply demand is still completely, it's imbalanced right now. We are seeing some movement into the Strategic Petroleum Reserve, but we do think that oil prices probably have set their low here at the moment.
Well, you say that about $20, but as you speak, we've twice broken through it, Phil, so it looks like there's real pressure here on the oil market. What about Brent? Brent seems to be calling a rebound here. Brent never settled as low as WTI. It's sort of happy with its $20 to $30 range.
Yeah, the benefit of the Brent crude oil is that if you go over to Europe and other parts of the world, storage facilities are much cheaper, so it's easily stored. You do have a lot still in the offshores at the moment here, but we do believe that, with U.S. equities tracking higher, we've got a nice explosive move moving up in the Dow and the S&P. We should see some stabilization. We'll see volatility come down, and oil prices should start to glide a bit higher.
Phil, is it a market you can have any money in right now? I mean, obviously, a couple of months ago, if you had said, give me some oil, I'm not going to give you anything for it, but I'll take it off you, you would have laughed, right? And now that's effectively what's happening. You're looking for somebody with storage. You'll even pay them to take it at this point. I mean, practically. So, where does it go from here?
If you look at, tanker lease storage is somewhere around, $30,000 a day for offshore. And if you were actually to look at the plot map around the globe, it is just splattered with dots everywhere. So there's plenty of oil that's floating all out there. We just need the supply-demand balance to come back more in line. We need additional cuts out of OPEC. We need confidence. We need the stay-at-home orders to be lifted, and then you'll start to see demand pick up. Cruise ships, airlines, and travel are probably still going to remain at very low levels. So you're not going to get that economic recovery from oil until at least the third, going into the fourth quarter. I'd be really optimistic. You have to be far out on the curve if you're going to trade this to the long side.
Yeah. Well, there's another market that's seeing a bit of a free fall right now, and that's lean hogs, Phil. I don't know if you keep an eye on those contracts at all, but we're certainly seeing fallout from the president suggesting that, he's going to keep meat processing plants reopened, and people not seeming to want to trust the meat food supply.
Yeah, we saw a big demand. At the counters and everything, we thought that there was going to be a situation where the meat processing, the packers and everything, they're going to shut down. There's going to be this run on meat at your grocery store. And then, unfortunately, that crop that's of cattle, of meat that's out there in the field, they're all going to be culled. But what you're seeing is the president's order. So now you're starting to see less of that culling, more supply out there. The demand is remaining constant. It looks like they're bridging that gap between the farmer and, the cattle rancher all the way to the consumer.
All right, a little bit of a relief rally.